Hey folks, Dan Frio here, the rate update. Today is December 22nd. We're getting close to Christmas. But I wanted to talk today about the new stimulus package and how that's will affect the economy. So basically stocks and bonds and so forth. And then I got a lot of people freaking out about, which rate's going to do, because people were looking to buy a house and now the holiday season's upon us. Not a lot of homes for sale. They're like, okay, January, February, March, what are rates going to do? Guys, I don't have a crystal ball, but don't go away, because we're going to follow that. And I'm going to give you what I think my trends are going to be. So we'll be right back with all that information for you. So don't go away. Okay, so the government finally passed, and the president's going to sign a new $900 billion stimulus package. Watch where you get the information on the stimulus package, because I'm doing as much research on there for you as I can, because I also like to be updated on what's going on, where that money's being allocated, how it's helping homeowners, how it's helping the economy, what's it going to do for stocks and everything else. So let me go over the headlines, and then let me show you some areas where you want to be cautious. And the reason why I'm saying that is, if you really want to know what's going on with the stimulus package, there's a little bit of conflicting data on a couple different websites, but I actually did find a website that has the whole thing on there. If you want to go through I think it's like 6,000 pages. If you want to go through it and you have that big of an attention span, you can do that as well. So the headlines right now is the S&P falls for the third day even after Congress passed a long-awaited COVID stimulus or deal. So remember when I said yesterday, I said in the effect is, what happens a lot of times is when there's talks about something. Let's say, for example, stocks. There's a rumor that something's going to happen to Netflix. Right now, the big investment out there is Bitcoin. Check it out. I actually own it in my portfolio. But Bitcoin is on a huge run, and a lot of it is speculative, because they're saying, Elon Musk, that owns Tesla, he's buying a big stake in that. Other banks are starting to hedge some of their money in Bitcoin versus gold. So not getting on to Bitcoin, I'm going to do that in January, because again, remember in January, we're going to talk stocks, bonds, helping you guys get more financial savvy and on your way to wealth management. So that being said, let's get on to the news, and what I was getting at is the S&P falls. Well, because when there's rumor of the stimulus package, everything's taken place. Then once the deal is inked, now it's already baked in, and now people start taking profit sharing. Here's a wild thing that I just brought up a second ago. Look, Elon Musk considers selling Tesla to Apple. So Elon Musk, that's who he is. He's the owner and founder of Tesla. So that's why I think the S&P is falling, but the good news is MBSs are actually rallying. Not big, but we'll take the +8. But what I do want to get to is some of the areas what I want to help you guys break down what the stimulus package contains. So I'm going to include a website address down at the bottom. You can go to CNN, and they have the whole document here of the breakdown of the whole stimulus package. But to break it down in its simplest form, what's happening right now is several different things. They're sending out $600 checks to every person that makes under $75,000. They're going to increase the unemployment, so you'll still get your normal unemployment if you're unemployed, but you're going to get an extra $300 a week versus, I think it was $600 or $900. It was $600 in the last package. The concern there was people were making more money staying at home than they would working. And that's why I even said that the unemployment rates were higher than they kind of could or should have been for the long duration of time, because a lot of people elected not to go back to work. Okay. But that's my own opinion. So you have that going in. So you got direct checks going out for $600 plus unemployment going up $300 a week. You have $325 billion to small businesses, $82 billion to schools, $69 billion to public health cares and vaccines and testing and so forth, $45 billion to the transportation industry like airlines and trains and so forth, $25 billion to rental assistance. they're saying rental assistance, but you don't see anything in here in mortgage assistance. So be careful there. $13 billion to the SNAP program. Abandoned most common bills. That is, I think, pretty much the biggest breakdown there. One of the things that didn't pass, and you'll hear this, was the legality. What the Republicans were trying to do is exempt companies from being liable if an employee got COVID at the workplace, and that didn't pass. But let me show you some contradictive websites. Okay, stimulus check on this website says there will be no second round economic payments to anybody. Well, the bill actually says that there's going to be a check for $600 for everybody making under $75,000. So again, that information is inaccurate. The rest of the information on this site was accurate, and you can also click here and you can see some of the other areas where money went to or toward. Okay, so that's that part of it. So now let's get on to what is this doing to rates and how are rates going to be affected going forward. Well, you just saw me go here a second ago, and this was +8. Now we're +11. So again, remember, I always say this trades all day long. So we can even end up at 0 for the day, but intraday, there were still movements in the market. But let me explain to you what we follow here on my channel. So if you're new out there, is we follow what's going on with mortgage rates. I'm having my channel revamped at the beginning of the year. It'll be now professionally done, and once a week we'll be coming out with a wealth management video to help you with stocks, bonds, investments, Roth IRAs, explaining all this stuff. And I want to say in its simplest form that I'm going to try to make it Wealth Management 101. What I mean by 101 is it's the basic, when you're in college, 101 is the basic course. So when you're taking History 101, it's basically your first history class. I won't say dumb this down. I want to put it in its simplest form. I want to put this stuff in English for you, not Spanish or German. I don't mean it that way, but in an easy form to follow, to read, and to be explained. Here's what I mean. And I said this in a previous video. Insurance to me is baffling. You have copays and deductibles and PPOs and HMOs and all this stuff. I just get, my family's covered with this. My wife says we want to go to these doctors and so forth. And I'm like, so I picked the plan accordingly. Be honest with you, I don't even know half of the stuff behind the scenes. And I get that with the stock market, the bond market, insurance, what's a Roth IRA versus a 401k, all this stuff that's confusing. So I'm going to break it down on a weekly basis to make it easy for you guys. So you can go back and say, what's a Roth IRA versus a 401k? You can go to my video and I'll just lay it out as simple as I can, not selling you anything or whatever, just explaining the stuff. So then when you go with your financial planner at work and they say you want to invest in this or what, you know what you're doing. Okay. So on this channel, what I try to do is I try to do this with mortgage information. So let's get back to where I was. I follow this, or people follow me every day to see what's going on with mortgage rates. So the biggest instrument or the biggest component of mortgage rates is what's happening with the mortgage-backed securities market. Okay, the mortgage-backed securities market is a bond that trades on Wall Street that is the biggest factor in mortgage rates. Okay, it's not the 10-year Treasury, it's not the S&P 500, it is this tool or this investment right here. This number here reflects what happened to the price of the bond. So to make it simple, bonds 101, if the price goes up, rates go down. You're paying more for a bond, that means the rate of return or the interest rate is lower. Okay? Conversely, the opposite. If the price goes down, rates are going up. So today, we like this. It went up 9. Awesome. That means rates might move down a little bit. Why I say might, there's a lot of other factors involved. But technically, and you can see this just went from 9 to 11. We are live right now in what's going on. So we go down here and we can follow what's going on in the market. What has the trend been over the last quarter? Okay? This is what it is. So if we go back further, you can see that we've had some major volatile times back here when the pandemic hit. Okay? But the Federal Reserve stepped in and said, you know what, we're going to buy up mortgage-backed securities and other corporate bonds to help stabilize the market. And when they said that and they came in and did that, here's basically what we've seen since then. Look at that. Other than this blip here, these 2 days were basically stagnant. If this was a stock, you'd be bored because you're like, it didn't move in 3 months when the stock market's up 20%. Well, we don't like unstable times here because instability normally causes rates to go up, or the banks have to hedge a little bit, so they increase rates as well because there's so much volatility in the market. So right now we haven't seen much volatility at all. I do not expect any volatility really to be pushed out in the next 30, 60, 90 days. There is an election in Georgia that could possibly swing the Senate to a Democratic-held Senate. It's most likely going to stay in control of the Republicans. The nice thing there is you have the House controlled by the Democrats and the Senate controlled by the Republicans, and that's kind of balancing of power. So you don't have one party kind of taking over everything. And that could cause some havoc in the markets. So the expectations in my mind is Republicans are going to contain or keep their seats in the House or Senate, and that'll be a balance of power. So we shouldn't really see any influx with rates in the next 30, 60, 90 days. So if you're not looking to buy a house for the next 60, 90 days or whatever, let's just continue to float your rates. Okay, so this is basically, again, the price of the bond. But if the price is stable, then the yield or the interest rates are stable. Now let's see what's happening intraday, because this can be kind of an eye-opener, because you could see a stock. I always say, if you look at a stock, you might say, well, the stock opened at 100, closed at 100, so it didn't really do anything. Contraire, it might have done a lot. So you can see here, we opened up the market here. We ran all the way up to here, which is fantastic, and then we crashed almost back down to where we started, and now we're running again, okay? There's limited trading right now because of the holidays. There's probably half of the people working on Wall Street, and so there's probably not a lot of trading taking place, and that's why you're seeing kind of big spikes in this. Normally, it's pretty stable throughout the day. So that's what's going on there. Economic calendar, let's see what came out today in that sphere. And basically the whole deal here in a lot of this stuff was the stimulus package getting approved. But existing housing sales, let's look at that. I didn't look at that yet today. It's right on the button. Consensus was 6.7. We came at 6.69. Nothing there. Domestic, the GDP, we're at 33. Expected 33. Nothing there. So you can see there's really nothing gonna, especially taking place the rest of this week, and everybody's probably heading out for vacation today or tomorrow anyways, so you're not gonna see anything probably through the end of the year. Nothing. You're gonna see stability in rates. You hear the headlines right here. I post this newsletter every day. Volatility is possible, but isn't possible today. There's nobody there. There's nobody to trade on Wall Street. This is a bond that trades. There's really everybody's kind of in holiday mode. So that is that's what's happening in the market. I'm not going over rates today. Rates are the same as they were yesterday. If you're interested in where my rates are, please click yesterday's video or go to my YouTube channel. You can check every day and you can see you can follow my rates there. And so that is it for today. So great news on the stimulus package. A lot of areas being helped, especially tenants not getting evicted. There isn't any relief here for mortgages, so that's not great news for that part of the economy. But here's what I ask people to do, and I do this at the end of each video. If you're in the process right now buying, building, or refinancing your mortgage, and you're working with somebody, please do me a huge favor. If you're having major surgery, you probably get a second opinion. I'm asking you to get a second opinion. Okay, how to do that is call me or email me what's called your loan estimate or your fee worksheet. If you're in the process of a mortgage right now, within 3 days of your application, we as the lender have to send this to you. So you have one, send it to me. Let me just review it. It'll take 15 minutes. I'll get right back with you saying, God bless you. What you're getting is fantastic. Sign, seal, close, don't look back, and have a great 2021. Most of the time, I'll write all over that thing with red pen saying, I can get you a lower rate, lower fees. Let's get this thing started. Put in your application. We'll lock you in now and get you moving. That's what happens most of the time. If you have a mortgage and you're at 4% or more, please email me a copy of your mortgage statement. I'll do a rental or a refinance analysis, send it back to you to show you the numbers, and then you determine, does this make sense for me to do? If you're at 4% or higher, you can probably get in the twos. I'm not saying you can for sure, but I'm saying most likely all of most of the rates we're closing on right now are in the high twos. Just think about it. You can possibly save $300, $400, $500 a month, or even reduce the term of your loan. So the best way to reach out to us is just go to therateupdate.com. That's right. That'll take you here. Scroll down. Here's our 800 number, 844-775-LOAN. That's 844-775-5626. Here's all of our social media. I'd love for you to follow us. You can email me. My name is Dan Frio. My email address is D for Dan, Frio, which is Frio, at preferredrate.com. If you want to apply right now, just hit the apply now button or get a free quote. If you hit get a free quote, me or one of my guys will be reaching out to you probably within the hour. Just ask you some questions. Not a hard sale. Just ask you, what are you looking to do? What do you have? Why are you doing this? And then we'll give you our expert advice on what you might consider doing. If you're in the process of buying a house, this is a way to pre-qualify quickly. If you're you want to look and see, does refinancing make sense? Just click this and it'll funnel you through an application. You'll answer some questions and it'll break it down. Give me the data, and then I'll get back with you and saying, okay, here's what I can come up with. Let me know if it makes sense to you. Okay, so that's that's the best way to get a hold of us. I do want to bring this up. There are ads that are popping up all over my YouTube channel. I think it says freeratequote.com or something like that. That isn't me. Please don't click it. You're probably clicking a telemarketing company or some kind of marketing company that's going to drive you nuts. I don't have pop-up ads. Basically, if you want me, you go here, you email me there, you apply here, or you call us. Or I'm sorry, let me go back. You email me when I sold you, dfrio at preferredrate.com. Click any of these buttons to apply, or go here and give us a call. Do not, if you would, please don't click on those pop-up ads. They're not me. And a lot of people are learning the hard way, unfortunately. So thank you so much. God bless. Merry Christmas to all you guys. I will be gone the rest of the week for Christmas. I'm going back home to visit my family and spend some time with my mother-in-law. Y'all know that my father-in-law just passed, so we're going to spend some time with her over this holiday season. So I wish you all the merriest of Christmases. Please give your loved one a hug and a kiss. Tell them you love them. You might not see them tomorrow. And unfortunately, I've learned the hard way in the last few weeks. So, but other than that, life is awesome, and I love what I do. And thanks to you guys, it allows me to do what I do. So take care. I'll see you next week. Bye-bye.